What's going on, everybody? It's Jeff here. Welcome back to the channel. The day started as expected with probably the biggest Federal Reserve meeting of the year kicking off its first day. I actually took a little time away from my computer, came back towards the end of the day, and it really started to recover strong. I'm getting a big feeling that the asset tapering that is going to be accelerated and when the time frame for the interest rate hikes is already starting to get priced into the market, and we will continue to see the market rally pending that we can fight off the Chinese trying to form and force a global financial crash. Combine that with AMC almost getting down to that psychological $20 level flat today. All strength, all buying. The short interest is still there. We're going to break everything down for you. Let's get right into it. First off, let's take a look at SPY. As you can see, it pretty much opened up flat early in the morning and then just started stair-stepping down. I expected the same thing I did as yesterday, and I had mentioned in my video, we would get that little bit of pop at the open, a little bit of action, and then a lot of, just hands-off reservedness. And it sold off and began to stabilize around 460. Then we started to get buying and strength almost all the way into close. I still think investors are a little bit fearful and weary on exactly what is going to be said tomorrow. But there's one article that I want to point out, and it said the Fed will halt asset purchases by March and hike rates in June. And this is only the survey, but they expected the Fed will double the pace of their tapering to 30 billion from 15 billion at its December meeting, which would roughly end the 120 billion in monthly asset purchases by March, which is a little bit earlier than expected. They also predict that the central bank will then hike rates 3 times in each of the next 2 years, starting in June of 2022. And I do believe that Powell had said at one point, originally it started off as wanting this, or raise interest rates. It started off all the way in 23, then it was the end of 22, then I believe was third quarter, sometime in the September timeframe of 2022, then eventually did get into the middle of 2022. So that is still in line. All right, it's not going to be any quicker. And like I said, just reiterated a little bit, end the 120 billion in monthly asset purchases by March, and the first rise rate is going to be in June. Now, like I said, they're still waiting Powell to say this, but by the look of what I saw, at least going in up until a little bit of close, there's probably a little bit of profit taking here and a little bit of weariness to hold overnight from the SPY as well as the tech sector, the QQQs, is that some of this is already getting bought back up. And when we zoom out here to that 5-day, you can see it was a pretty far drop down, all the way from 400, the QQQs, down to that 380 level in just 2 days. And some of that is going to have to get bought back up. But it has me thinking how much exactly is going to get priced into. So pending, like I said, the Chinese are really pushing the global financial crash, and pending what Powell is going to say tomorrow, I do expect we might get to see that Santa rally for the last 2 weeks of December. So keep that going forward. I did mention to everybody inside the group that it might not be a bad idea to start grabbing some of these long positions on any basically strong stock, strong company that has been beaten down over the last 2 days, with room to add to your positions in case it does dip a little bit further. Don't go heavy on these positions. Now, next thing I want to talk about is AMC. This morning, it almost looked like it was starting to stabilize around that 22, 21.50 area, and that rapidly just accelerated to the downside, getting all the way to almost $20 even. That is a big psychological level. As soon as market opened, and you can actually see I have these bearish pattern, these lines drawn just to see if it would break through. It broke through the first one at about 9 o'clock Eastern time, but it did hold as soon as the market opened. And since then, it was all strength and just continuous buying coming through. The next thing I want to mention, and I was surprised to see this, is the volume on AMC. Okay. And while it might only be up 5%, which is still a good gain for the day from last market close, from where this stock was at $20 to its high of over 25, that's a 25% intraday gain. And if you look at this, because I've mentioned this before, with AMC. When AMC offers that wide range, that's when it becomes a day trader's paradise. They ride it to the high side, they ride it to the low side. But as you can see here, all the way through strength up until pretty much 24.50 early on at about 10:30 this morning, there was no selling. This is all buying, a little bit of profit taking, and then it really just continued throughout the entire day. Now, this is looking at a 1-minute chart. When you zoom out to the 5-minute, it's a little bit more stabilized. As you can see, the stair stepping continuously making higher highs and higher lows. And by looking at the time and sales all day, you can see there was a lot of pretty good size buy orders coming in for AMC, and the volume just goes to show it. We were over double the average daily volume. That is one of the biggest things that AMC has struggled with, is getting people attracted to the stock. And we mentioned that $36 to $42 level, and I'll zoom out for you just a little bit to really clarify and harp on this, and why letting the stock could be, or letting the stock breathe could be good for it. Okay, I'm not saying it doesn't have more room to potentially go to the downside, because it's really going to need to stabilize and curl before it can make another run back up to the upside. But when we saw that range in there from just that 36 to, let's say, like 42, and it was taking 5 or 6 days to really swing through that, and it got to be tighter between 38 and 40, it really wasn't offering the range for the volume to really accelerate and come into it. And as you can see, it wasn't really just today that we saw a lot of volume. It's been the past few days, as you can see this chart ramping up. Now, there was a lot of selling going into this and continuous shorting. It's going to be interesting to see how many institutions that might have had to exit their positions if they were over leveraged because of what I've talked about with everything that is going on over in China, and just the fact that the market was naturally pulling and the margin requirements might be raised for some of these lenders and the broker dealers that are taking an excessive amount on margin. It'll be interesting to see, but we're not going to get any of that data until deep into Q1 of next year, because this is going to come out from the Q4 13F filings. So it's going to take a little bit of time to figure that out of how much that was selling. But you can see the volume coming back into it. And like I said, now it offers a really good range to be able to get into a good position. But like I said, 25% on an intraday swing was good. And when you see it, it wasn't whipsawing. So it shows there is still interest in this stock. Okay, now as much as the last few days, and I've mentioned this before, and I'm not going to sugarcoat that it's not easy to stomach when you can see a 33 all the way down to 20 in the matter of almost pretty much less than a week. But seeing that the interest is still there in the stock, we're going to have to see if it's going to last a little bit longer. Obviously, us apes are fully, our interest is to the max. But like I said, as long as we can continue to attract the buyers that might have stepped out, or the buyers that have been waiting on the sidelines. So it'll be interesting to see over the next couple of days. Now, keep that in mind, what I mentioned about any other positions you're looking to enter long. Give room to add going down, because like I said, the Fed is still speaking, and as history tends to repeat itself, investors always take a step back. They get a little bit nervous. That's when you see, the ticker symbol VIX, the VIX, which is a fear volatility indicator, start to rise. It was actually starting to decrease towards the end of the day. But like I said, it's very normal for these 2 days, the Tuesday, Wednesday, for the volume to be slow across the board, and it to be a little bit slow of a sell-off. Maybe the pop at the open, like we saw today, but seeing some strength might give us a good indication that some of this is anticipated and already priced into the market. So guys, that's it for this video. I'll see you in the next one.